tightening of financial conditions means higher rates, lower equity prices, and wider credit spreads. Okay, those are the three things. The things that impact it the most are the risk factors: higher credit spreads and higher equity prices, or lower equity prices. So he's doing everything he can, in my mind, to control that. At the same time, he wants to keep real rates negative because he's got a massive debt problem and he needs to continue to fund it. So those are, to me, those are the things that he's doing to try and control where markets are going. And he can do that. I think he can do that right now because he's got this sort of 6 to 9 month window of transitory inflation that everybody's okay with.
Okay.
But come, end of Q3, middle of Q4, end of Q4, into Q1 next year, if we're still seeing inflation numbers like we're seeing, he's going to lose that. He's going to lose that window.
Okay, and then
he's going to be in another. He's going to be in another spot.
Okay, so let's talk about that spot because I'm dying to know how that plays out.
Well, I mean, it's impossible to know how it plays out.
No, but what's your guess? What's your guess? You've seen a lot of markets.
You look at what the Fed's done, right? They just constantly kicking the can down the road, right? So they're not trying to upset any apple cart. They're just trying to keep it all going as best they can to get to the next junction. So he wants to keep policy stimulative. He doesn't want the equity market to fall over, and he wants to keep long rates, or boring rates, which in the U.S. is frankly long rates, as low as he can.
Right.
And so I just think he's managed to do that for another 3 to 6 months. When inflation shows up again, he's going to have to do something different. So my guess is he'll start to taper. Okay. So when he starts to taper, the market will take that as a sign of, some of liquidity coming out of the system. It might be tightening of financial conditions, but it'll certainly be liquidity out of the system. Likely credit spreads will not love that.
Okay.
I would guess, to be honest, that interest rates will probably be contained as they do that. But I think after we've done that for 3 or 4 months, I don't think the market can handle it.
Okay.
I think the market will fall over.